Okay, so I'll mute myself.
All right.
The broadcast is now starting. All attendees are in listen-only mode.
Welcome everybody to the Leaders in Housing Counseling call. We can see people are just getting on right now, so we'll give it another minute or two and then we'll dive in. Okay, well this is Bruce Dorp-Halen from the National Housing Resource Center. Glad to have you all on the call. Thank you. We're glad you're here. Actually, one quick thing is a quick apology. I'm having some craziness with my with the Leaders in Housing Counseling listserv, and my emails are coming out twice, even though I'm only sending them once. We haven't quite figured out what's going on yet, but my apologies. Bear with us, and hopefully we'll get it fixed, and you can forgive us at that point. And apparently some emails went out with a portion deleted, the one about the has it really been a year? There's supposed to be an itemized list of some of the great things that National Housing Resource Center has already accomplished, and some of you got it and some of you didn't. So maybe we'll send out a second version of it once we figured out what the problem is. But my apologies. You know, it's just one of those mysteries of the technology. Well, we've got a full agenda today, and we want to dive right in. And we have as our guest today Debbie Goldberg from the National Housing Resource, from NAFA, from the National Fair Housing Alliance. And we wanted to give you quick updates on what's happening. We have some late-breaking news on the federal funding, and we want to talk a little bit about the reverse mortgage legislation that got passed. And then we'll dive in with Debbie Goldberg, and then we talk a little bit about what NHRC has been doing in the first year. And we're going to revive our conversation about MSMO. I hope you guys remember MSMO, but if not, we'll fill you in on the details. But it's one more piece in this integrating housing counseling into the home buying process. I think it will be very valuable for us all in the future and help make housing counseling one kind of key element in anybody who's buying a house and getting a mortgage. And then finally, we're initiating a communications discussion, which could be very interesting, and hoping that some of you, or maybe your communications experts, might want to participate in that as well. So keep that in mind. So let's dive in. So Matthew, tell us what's happening in the Senate on federal funding.
Yeah, there's been a flurry of activity in both the House and the Senate as they're getting ready to go on their August recess. Literally just moments before the call started, the Senate had a vote on their THUD bill. The numbers are up there, but that was the more favorable one with $55 million for HUD housing counseling funding and $77 million for NFMC. Unfortunately, that bill was just filibustered by the Republicans. Unfortunately, there had been some Republicans, there had been 6 that had voted at the committee level, the Appropriations Committee, to send it to the floor, but some of those went back. Senator McConnell, the minority leader, had been really lobbying and pushing the Republicans to filibuster, and they were successful in the end with doing that. Then on the House side, though, it's been really interesting. Yesterday, the THUD bill had been on the House floor. The House leadership, Republican leadership yesterday, decided to pull the vote from the floor. The Appropriations Chairman, Hal Rogers, was really pretty outspoken and upset about the leadership pulling the bill. He essentially said that it was because they didn't have the votes. There was, a few dozen really conservative Republicans who thought it still spent too much, even though it cut spending really drastically. But then they also lost a handful of moderate Republicans who thought it cut too much. So they just didn't have the votes, so they pulled it. So Chairman Rogers, you see a quote up there. He said he thought them passing the bill at all was bleak at best, the chances. He also said that he thought that this signaled the House making the choice that sequestration is going to have to go, that they're just not going to be able to pass these budgets with these extraordinarily low spending numbers. And the other last bit of news is that Speaker Boehner this morning said that he thought it was impossible that the House would pass all of the appropriations bills before the end of the fiscal year, which is September 30th. So he said that he thought they should do a short-term continuing resolution. That is all I've got.
Okay, so that little man in the blue suit that's frowning and unhappy, that's kind of our view of all of this. We had been hoping that the House would not pass their bill to strengthen the Senate's position. The Senate's bill was much stronger and had numbers that were very helpful to us, but it looks like the Republicans are filibustering that and at this point have stopped it. So not good news here. So what are the next steps?
So starting tomorrow, or tomorrow is the last day, and then the both houses will go on for their August recess. So this is really a great time for. Let me go to the action steps first. This is a great time to meet with your reps or senators. You know, they're going to be at home, and you can set up meetings and talk to them about the need for funding housing counseling. So I'm going to go back. This is a list, and I'll send this out after the call. So if you don't get it, don't worry. But this is a list of critical Senate Republicans that we really want to focus on. These are folks who have, in one way or another, supported the THUD appropriation bill. So, you know, they're obviously willing to join us. We just need to really push for them to do so when they come back in the fall. Also, I included Senator Collins, Cochran, and Murkowski there. They had been consistently supportive. Unfortunately, Senator Murkowski was one of the Republicans that reversed today. So we could actually just leave it to Collins as Cochran's as the two that have been consistently supportive. But those are the Republicans we really want to focus on during the August recess.
And I think our goal here, in some ways, is to really establish a long-term relationship with their local offices, and that if you can establish a working relationship with their staffers, continue to give them information, continue to offer to provide free counseling for any of their constituents, those kind of things that will kind of build a bigger, better identity will be helpful to all of us. It does look like where we're ending up is where I think we had predicted at the beginning of the summer that it's likely that we'll end up with a continuing resolution. That means that the baseline for funding that's available will be this past year's appropriations bill. Not quite clear how the sequester will fit into that from last year's appropriations. But it looks like everything's moving towards that. We will continue to encourage HUD to get their NOFA out early before the numbers are known so that the decision-making process gets started, the awarding process, and then we will continue to ask HUD to do the funding in increments as the continuing resolution rolls out. The word that we've gotten is that they're seriously looking at this, but it's unlikely that anything would happen in the until at least I guess not in the first quarter of the federal year, which takes us through December into January. But you know, this is all totally hypothetical. We'll keep you informed as things develop. There was also, Matthew, do you have anything else?
No, that's all I've got.
Okay, good, thank you. Let's see. There was also, the Senate passed the Reverse Mortgage Stabilization Act, which is around reverse mortgages, and it already passed the House, so this is one bill that's gotten a lot of bipartisan attention. The reason is that part of the deficit that the FHA fund has been running has been driven by the reverse mortgages and the losses in that particular pool. And one thing that they are doing is to make, in order to do any changes in the procedures in reverse mortgages, they had to do a rulemaking process, which is that where they announce it in the Federal Reserve, the Federal Register, and then they promote this through comment periods, and then finally make a decision. That's a really long period of time. So they want this to be treated the same way that FHA mortgages are, which means that they can issue mortgagee letters and have a much quicker process in terms of changing the process around the reverse mortgages. They did make some changes so that HUD, it allows that HUD would make financial assessments of the HECM applicants to determine if they're going to be able to handle the responsibilities of the loan. Now, obviously, they're not monthly mortgage payments, but there are taxes and insurance due. That's one of the areas where there were problems with the reverse mortgage, and so building in some piece of that, we're always a little nervous because the one really helpful tool of reverse mortgages is that it wasn't driven by people's credit and not really a lot by their income. So hopefully, it seems like there's a good compromise that could work well, but it's something we need to keep our eye on. They wanted to make sure that each borrower had funds for tax and insurance payments to make sure that that doesn't become a problem, which was a big problem for some of those people. They also made sure that they would include borrower spouses on the loans. And I'm assuming what that means is that if one spouse is of age and the other one isn't, that they can both be on the loan so that if something goes wrong and the spouse of age dies, that they don't have to lose the property. But I haven't actually seen the wording on that, so we'll have to figure that out. And the last thing is that they would there'd be some restrictions on how much money can be drawn out initially out of the line of credit. And I hope that becomes kind of a protection against some of the predatory aspects of these, but again, we'll need to see the wording on it. So I think everybody expects that Obama will sign this quickly and this will become law, and we'll learn more about it as we go. Okay, so we have Debbie Goldberg on the line, and Debbie's from the National Fair Housing Alliance. Hopefully many of you know Debbie and have seen her in action or heard of the good work she's doing. She's been deeply involved in addressing many of the injustices in the foreclosure crisis and has been one of the real leaders. It has actually been the leader on critiquing the independent foreclosure review debacle that happened, and has been, I think, very helpful for all of us in terms of just sharpening what exactly went wrong and what needs to be done. And she's always been a very clear, respected voice on fair housing issues and the broader crisis and how it impacts homeowners and communities, especially communities of color. And so she's working on a project about how to get the fair housing laws to apply to the challenges of the foreclosure crisis. So Debbie, tell us what you got.
Great, thank you, Bruce. So I want to start by saying thanks to Bruce and the National Housing Resource Center for inviting me to talk to you all today, and thanks to all of you who are on the call for joining in to listen. Let me give you, for those of you who aren't familiar with the National Fair Housing Alliance, just a tiny bit of background on who we are and what we do. So as you can see on the slide on your screen, the National Fair Housing Alliance, or NAFA, we're the only national organization that's solely dedicated to ending discrimination in housing. And for us, that means all aspects of housing transactions, whether that's someone who's out there looking for an apartment to rent, a home to buy, trying to get a mortgage, trying to get insurance, or in the case of the work that so many of you have been doing, I think primarily in the last few years, trying to get help from their mortgage servicer in order to avoid foreclosure when they're having trouble making their mortgage payments. But we work on all of these different areas. Some of you may have seen our recent settlement with Wells Fargo, $27 million settlement that comes out of an investigation that we did over a multi-year period, looking at how Wells Fargo and other banks, for that matter, are handling their foreclosed properties, their REO properties. And we went out and assessed properties in 19 different cities around the country, hundreds of properties, to look at how they were being maintained, how they were being marketed, how they were being managed. And we compared the way that was happening in communities of color and in white communities. And not surprisingly, what we found is that those foreclosed properties that Wells owned in communities of color were much more likely to have many, many problems like, leaky roofs, unsecured doors, broken windows, falling off gutters, major amounts of trash in the yard, overgrown lawns, et cetera, and much more likely either not to be marketed for sale at all or to be marketed as a foreclosure, as a distressed sale, and therefore to go in the end for a much lower price, spend a much longer time on the market, and be much more likely to be purchased by an investor rather than someone who is an owner-occupant. So that's just one example of the kind of work that NAFA does. We have about 220 members around the country, which are private fair housing groups, private nonprofit organizations that work with folks in their local community who think they've been discriminated against, who also do education and outreach both to the public and to people in the real estate industry to help everybody understand their rights and responsibilities under the Fair Housing Act. And some of our members actually do housing counseling, have housing counseling programs. So I want to give a shout out to any NAFA members on the phone who fall into that category. A great many of our members who don't themselves do housing counseling work with organizations like all of yours to provide some fair housing training as part of home buyer education programs, and sometimes to help identify potential cases of discrimination that may come through your doors and help those people get a good resolution to their case. So I would encourage all of you, if you don't already have a relationship with a fair housing group in your community, to reach out and build that relationship. And if you need help finding your local fair housing group, you can get in touch with me or my colleagues at NAFA, and we'll help you make that connection. So NAFA, as Bruce has suggested, NAFA has been very concerned for years now about the impact of the foreclosure crisis. It is very much on our minds that many of the kinds of loans that were responsible for this crisis were targeted to communities of color, and there's been a tremendous drain of wealth from those communities as a result of those abusive lending practices, being so heavily focused there. And in fact, back in 2007, we, along with a couple of other national civil rights organizations, called for a moratorium on foreclosures because even though that was before many federal policymakers recognized, at least publicly, that there was a crisis underway, it was very clear to us, and we were, wanted to get their attention and get some remedial steps put in place. Unfortunately, people didn't listen, and it was, much later that we began to get some tools to help borrowers who were facing foreclosure avoid losing their homes and, losing all of the wealth that they had built up in those homes. But, you all know much better than I that this is a continuing problem and that it's not a slam dunk for somebody who's having trouble making their mortgage payment to be able to get the kind of assistance that they need to avoid foreclosure and to save their homes. And from the reports that we've been getting from various places in the field, it seems to us that there's some particular problems that are being faced by people of color, by people who speak languages other than English and who are not proficient at speaking English, and in some cases by people who have disabilities, in particular in terms of the cases we've been hearing about, people who are blind or have vision impairments and people who are hard of hearing or deaf. And so, but the language issue seems to be the one that's particularly bubbling to the top. And so we're hearing stories, which I'm guessing many of you have experienced or your clients have experienced, of people who just run into lots and lots of roadblocks in trying to work with their servicer to get a loan modification or some other foreclosure alternative, and be able to either walk away from their home in the best possible circumstances, or better, to be able to hold on to their homes. So it's things like this. These are the kinds of stories that we've been hearing. The person who's assigned to the borrower as their single point of contact doesn't speak the borrower's language. So every time the person calls, they have to go through a whole kind of song and dance about what language they need help in and get often transferred around the servicer's shop until they find somebody who speaks that language. If there's someone on staff who speaks that language, it's likely to be someone in customer service who may be able to have a very nice conversation with the borrower but can't tell them a thing about their application for a loan modification and doesn't have access to those records. So it's not effective communication and doesn't help the borrower, advance their application. Or it may be that the servicer uses a language line, but the borrower doesn't speak one of the languages that's available on demand, and so they have to make an appointment to come back at a later time to be able to speak to the servicer representative, the language interpreter, and if they're working with one of you or your colleagues, with their counselor. And that's a lot of people's schedules to organize and coordinate, and so it may really delay the process of being able to have a conversation about the status of the person's application, what needs to happen next, what the outcome is likely to be, and when they'll get a decision. People report that servicers do not translate documents. So, one of the things that I always remember and keep in mind is that somebody was able to market the mortgage to this borrower who doesn't speak English, but which likely means that they both had staff who spoke that language and materials, at least some materials, maybe not loan documents, but other things that were in that language. And yet at the back end here, when people need help, it seems to be much harder to garner those resources from the servicer. And so documents are not translated into the languages that people need. If they are available in those languages, as, for example, some of the HAMP forms, as I'm sure you all are very well aware, are available in Spanish. So you can read the document in Spanish, but you can't submit it in Spanish. You still have to fill out an English language form, which can be a problem for people. If there's some additional documentation that the borrower has to provide, the servicer won't accept that in any language other than English either. And there have been some stories of borrowers having to jump through just tremendous numbers of hoops in order to get their hardship stories translated back into English so that the servicer will accept them. And sometimes even documents that the servicer or the bank provides in Spanish, for example. I'm not aware of it in any other languages, but like a bank statement that might come to the borrower in Spanish from the bank that is servicing their loan that they need to submit in order to document their income and expenses for their modification request. Even though that Spanish language version of the bank statement comes from the bank, it won't accept it as documentation for the loan modification request. So there's a whole series of stories like this that we've been hearing about, barriers that people encounter because they don't speak English and their servicer cannot communicate effectively with them in their native language. Some of the worst stories are of people who get a letter offering them a loan modification with a principal reduction, for example, under the National Mortgage Settlement, and don't understand what the letter is telling them, don't know what's being offered to them. And, we hear these stories from people who take their letter to their servicer, to their counselor, and the counselor can translate and interpret for them so they understand what the servicer is offering. But it makes you wonder about all of the many people who aren't working with counselors and don't have someone who can translate, who may have lost out on an opportunity for a really affordable loan modification because the communication from their servicer didn't come to them in a language that they could read and understand. We've heard stories of servicers, even when they know that the borrower doesn't speak English, that the counselor speaks the borrower's language, and that the counselor is an authorized representative for the borrower, of going directly to the borrower without including the counselor and asking them things like whether they'd like to be not considered for a HAMP modification, but instead considered for a proprietary modification, which, as you all know, is often much less affordable and sustainable. And because the borrower doesn't really know what the servicer is asking, they just know it's their servicer. They answer yes because, they want to move things ahead. They want to be responsive. And in the end up with a modification that's not as good as what they were qualified for and should have received. So there's a whole series of scenarios here that we've been hearing about that really represent barriers people are encountering, and I think are also representing borrowers who are either not getting any outcome that's positive, losing their homes through foreclosure, or not getting the kind of outcome that they really are qualified for and that's the most affordable for them. So those borrowers in particular are really experiencing harm. I know you all have seen the surveys, particularly the survey that Bruce and Matthew did not too long ago, with numbers about how often these kinds of cases are being reported by you and your colleagues, and the numbers are really disconcerting. Way too many people are running into trouble and not getting the help that they need from their servicers, either because of these language problems or because they're blind or have impaired vision, or they're deaf or hard of hearing and they can't communicate effectively with their servicer. So for us at the National Fair Housing Alliance, there are a couple of laws that we think about these kinds of problems in relation to, and laws that we think may represent tools that can be used to address these problems, both for potentially individual borrowers who are encountering these, but also to craft more comprehensive solutions that could be bank-wide or industry-wide that would mean that many, many more borrowers would not have to run into these kinds of problems. So one of the laws is the Fair Housing Act, and I think Matthew has a slide here that will tell you what the protected classes are under the Fair Housing Act. The Fair Housing Act prohibits discrimination in any kind of housing-related transaction, which would include mortgage servicing, based on race, color, religion, national origin, sex, family status, or disability. And it's our view that the national origin category may protect people who are not native English speakers, because in general we're going to find those are folks of particular national origins. In addition, we don't have a slide about this, but there's another federal law that applies to all credit transactions, not just housing, but also provides protection for people who are working with their servicers on foreclosure prevention actions. That also is the Equal Credit Opportunity Act, which also covers race and national origin. It does not cover disability, but it covers many of these other categories and a few additional ones as well. But again, the race and national origin categories are also protected under the Equal Credit Opportunity Act. And so, we've been hearing these stories on a kind of sporadic and anecdotal basis, and are really wondering whether you all have cases that might be the right cases to bring some kind of enforcement action and try and get a solution to this problem. Under the Fair Housing Act, you can file an administrative complaint with HUD, which can result, HUD will then investigate, will try and resolve the matter. It can result in benefits both for the borrower themselves, potentially what the lawyers call injunctive relief, which would apply to a large number of people who fall into the same category, and also for organizations like yours who were in many ways harmed because of these practices as well, because it requires you to spend more time and more of your resources breaking down these barriers for people when they shouldn't exist to begin with. So the Fair Housing Act, which offers this opportunity for an administrative complaint, and also where you can actually file a lawsuit in court under the Fair Housing Act as well, might be a tool that we could use with the right case or cases in order to break through these barriers. And similarly, under the Equal Credit Opportunity Act, while there's not the same kind of administrative complaint process, there's the legal process where you can go to court and file a case. And so my colleagues in the enforcement part of NAFA are really interested in knowing whether there are cases out there that we might be able to work with you all or your colleagues on to try and crack through these issues. In addition, I think there's another route that we could take by working together, which is to be able to collect more of these cases and take them to the federal regulatory agencies who have oversight responsibilities for mortgage servicers, whether that's the folks at HAMP, at Treasury, who run HAMP, or whether that's the folks at the CFPB who have just issued servicing rules and I think are going to continue to do some work in this area, or the banking regulators who still have responsibility for enforcing the Fair Housing Act as it applies to mortgage servicing and mortgage lending in general, and get them to adopt better guidance for servicers, best practices that servicers should be using so that people don't encounter these problems, and also to do a better job when they go in and examine institutions to make sure that they're not discriminating in any of these ways with respect to borrowers who either do not speak English proficiently or borrowers who have disabilities of one sort or another. So we are really interested in finding a way to hear about the cases that you all may have and to work with you on finding resolutions that benefit everybody. So that's really the presentation that I wanted to make to you all. I don't know, Matthew, have there been any questions that people have submitted?
We've got a fairly general comment that I'll just read from Rob Strupp at Baltimore Neighborhoods Inc. and maybe you want to comment on that. But he just kind of wanted to put on the table the notion of who's actually receiving foreclosure relief. He says the CFPB complaint data suggests communities of color are having the most difficulty resolving servicer issues. And he also said that B&I would like to work with you and NAFA, and I'll let folks know there'll be a chance later on to let us know if you want to work with Debbie and NAFA.
Great, right, and so thank you, Rob, for that comment. That was one of the results that I think you all found in the survey that the National Housing Resource Center did as well, that borrowers of color were reported by counselors to be receiving less favorable outcomes than white borrowers were. So I think that's reflected in the kind of situation that Rob is reporting from Baltimore.
Yeah, that's absolutely right. We did find that in our survey.
Right.
Yeah, and I think we wish there was better data out there, and that's one of the things that Debbie and many of us have been working on to try to get many institutions that are involved with the foreclosure crisis to provide better and more transparent data. I'm wondering if, and we can continue the discussion a little bit, but I'm wondering if we should do the poll here. The idea is that if you are interested, if you have clients that fit into some of the things that Debbie just described, and you're interested in working with Debbie and her team about helping figure out if what the situation is and if it could be used either in an enforcement action or potentially in litigation, if the clients would be willing to do that. But taking the first steps with just communicating with her, you could vote yes on this poll, and then what would happen is that we'll have your email address and we'll share that with Debbie, so she'd have a pool of people to reach out to. This won't be the only time to do this, but if you're at all interested, this would be a good time to get in early on this conversation. Voting no would be pretty much meaningless. Nobody will look at that number because we're only looking for who's interested in doing something. So is the poll open? Okay, good. Well, then let people vote.
So, Bruce, while people are voting, let me just make one other point, if I could, which is that, as I've been thinking about this and thinking about how would you describe the harm that people have experienced because of these language barriers or barriers related to disability? There are many, some of which I think I described already, of people who don't get the access to the outcomes that they should because the communication is ineffective. But I think another one may be that it just drags the process out, and it takes a lot more contacts with the servicer to get to the same answer, and a lot more time to get to whatever the answer may be, and that during that time, people are racking up additional interest. They're getting farther and farther behind on the amount that they owe on their mortgage, and in the end, maybe in some cases they end up not qualifying because of how much deeper in debt they are. But in any case, they end up, having to ultimately pay more because the process took so much longer. So that's one additional kind of harm that I think people may be experiencing that I wanted to put out there for folks to be thinking about. And if there are others that I haven't mentioned, I would love to hear about those as well. If you've encountered other kinds of harms that you're non-English speaking or disabled clients have encountered. It'd be great to know about those.
Good. So are people still voting, or Matthew, are we ready to close this? So, so do we have hard numbers on how many said yes?
Just doing the math quickly in my head, I think it's about 7 or 8.
Good. Okay. Great. Okay. Excellent. So we've got 7 or 8 candidates already. You'll have Debbie's email address. You can communicate with her. You can certainly communicate with me as well. As all of you know, this has been an ongoing conversation that we've had. We had a series of meetings with regulators and with the administration where language access was a major part of that, as well as the procedures of the HAMP program and servicing standards, all of which fit neatly into this. So, you know, this will be an area that we're all going to do more work in, but NAFA brings its own particular expertise, and that would be, it's great to have people jumping in here.
Great. So thank you, Bruce, for inviting me to be on today. Thank you all for listening, and those of you who responded, I look forward to being in touch with you all.
Great. Thanks so much, Debbie. Always good to hear from you. All right.
Take care.
Great. Bye.
Bye.
Good. Well, you know, I think we've learned a lot this spring from what counselors have been saying, and certainly from your contributions in the survey that we did on the AG settlement, all of which kind of has helped document this and helped galvanize viewpoints. It is pretty interesting. We met with Treasury yesterday with the people who run the HAMP program, and the whole idea was that letter that we'd circulated were about reforming HAMP, and it's very clear that they are completely aware of this issue, that that there's lots of non-compliance, that there's lots of challenges, especially around language issues, and I think we've really helped elevate that this last spring and early summer, and figuring out how to enforce it more effectively. I think there'll be a number of things being done, but what NAFA's doing will be one tool in that box, and as you may know, they can be quite effective, so that will be very helpful. We'll spend a little bit more time on the HAMP conversation on our next call, but there was a lot of interest in getting and solving some of the problems that I think came out in last spring's meetings, like not requiring 2 signatures on a 4506T, and so not sending back the 4506T as being incomplete if it's a joint return and only one person signed it. The IRS accepts it. If the IRS accepts it, they should accept it. They were also very interested in this idea that if we have an RMA that's written in Spanish, that the servicer should be required to accept it. A little bit of queasiness around that one about this whole question of language, but what's not written in English is legally binding in our system. But it seemed like we thought that they'd be able to give servicers comfort on this issue. It was actually a long 2-hour meeting, and we went through a lot of details, and so we'll spend a little more time on it on the next call. But we're chipping away at some of these issues. An area that we actually did some work on also was to try to improve the outreach that they do and get more of those cases going directly to counseling agencies. So we'll see what we come up with on that. That wasn't an absolute answer, but we'll talk about this more in a call in 2 weeks. So the National Housing Resource Center turns 1 on August 7th. That was the first day we officially opened doors, though in fact, you know, we'd spent several months ahead of beforehand doing a fair amount of work. But, you know, it's been a pretty interesting year. So we won the $24 million in new money from the OCC settlement, stuff that wouldn't have happened if we hadn't been around. And that was checks that went out to organizations all around the country. We're hoping there might be a little bit more that comes in that pipeline over the next 2 years if they don't end up spending all of their soft money on other things. Though probably we're not aware there'll be any more big ticket items in that field, but still lots of new money, a one-time shot in the arm. We, thanks to everybody's work on this, but you know, we led the fight on getting the new MHA money for making HAMP applications and for outreach. The outreach money that groups get out of that program, Treasury's watching that very closely. So a few groups are going to be doing door-to-door outreach, and there's been a lot of talk about how to try to make that a more effective piece. There's some very big success stories outside of HAMP, like through the Philadelphia Mediation Program, trying to get that to be replicated more, and there'll be some experimentation that a number of your groups are doing, so that's an exciting area. But it was new money that we all came together and were able to get out of the TARP funding. We've been able to integrate housing counseling much more effectively in the regulations, and so in conversations, the OCC, the Federal Reserve, FDIC, and especially the CFPB, the Consumer Financial Protection Bureau, we've really been able to get them to integrate housing counseling more routinely and to create a crisper definition of what housing counseling should be doing and what its role is. And so a couple examples. One of the things we got was that servicers have to work with whoever the authorized representative is for the homeowner or home buyer, and that means that housing, and that was specifically put in so that housing counselors could not be refused by servicers to work with the counselor, and that only goes into effect in January. So, but if we hear about violations, we'd love to know about it. This is an area that, you know, it used to be a terrible problem. It's certainly gotten a lot better, but there still continue to be problems in that area. But this would solve the problem of the counselor who is calling in with a client for the first time. The RMA is not submitted, so there's no written authorization. The homeowner can do a verbal authorization over the telephone, and they will be in, and will be the problem will be solved. So I know that there's been continuing problems with servicers not allowing counselors to speak in the initial connection with the servicer lender, and we think that problem will be solved as of January 1 when this all goes into effect. Very interested if there continue to be violations there. It's the kind of thing we want to enforce. We also got the CFPB to not list. So one of the things that in Dodd-Frank was that when you're originating a loan, the originator needs to give the homeowner a list of or a list of counseling agencies or counselors. It would be a disaster if they were giving a list of counselors, because many of you have procedures of how to intake people into your program, and if everybody was calling your agency just asking for one person, you don't know if it's an existing client, I mean, all that kind of stuff that would have really messed up the systems that exist. And so it was a hard push up the hill, actually harder than we thought, but at the last moment the CFPB did come around and they just list agencies. There's lots of these little things that we've been working on trying to get into the system. There are plenty more we'll be working on. We're going to be working on some bigger things about as they retool the financial reform system, when they retool Fannie and Freddie. We're trying to embed housing counseling into all those steps in the process. We are, we've got the, we did the National Mortgage Service, we did a bunch of surveys. So one was very helpful to HUD on the 9902s. We know that had a big influence on what they were doing. The National Mortgage Servicing Standards survey that we did on compliance that many of you participated in and we talked about today, that one has turned out to be a great document that continues to get brought up by regulators and helps really clarify a lot of the issues we're working on. We now have the online checklist for counselors to identify violations on the National Mortgage Servicing Standards, so please, please, please use this. You can get it off, you can get the link off of the front page of our homepage of our website, and that's www.hsgcenter.org. And with these, you can submit cases and then you can submit it individually right after you've done it. Right after you've entered your data, you can submit it to the state AGs in your state. You can submit it to OMSO. You can submit it to the CFPB. And this is a great tool. It's a fair lending violation. You can submit it to HUD. So we want to really get this to be used a lot. We trained over 1,000 counselors on the National Mortgage Servicing Standards webinars last month, and got pretty good reviews on that one. Those are recorded and they're on our website as well. The listserv's been working really well. We've my notes say that we have 550, but I just looked. We're just about to break 600 senior managers in the housing counseling field that are on that list. So if you can go out and recruit an extra 4 or 5 people, we'll break 600. We're very interested in agencies that aren't on the list already because we're really trying to get out to the entire industry. We have just assembled the email addresses for the rest of the counseling agencies that aren't on the list, and we'll start sending invites to them to participate. So we hope to have a surge of business there. We do the leaders call twice a month, and seem to be doing well with that. We're doing regular surveys of counselors and on cutting-edge issues. We're meeting with the administration regularly now on a variety of issues. I think we're making some real progress with FHFA, and we'll talk about one of those initiatives in a moment, MISMO, excuse me. But we've done good work with Treasury. I think we had a very good meeting with HUD and FHA with Carol Galante and Sarah Jarik. Sarah Jarik was on our calls a couple months ago. We're going to continue doing all that. We're going to continue to try to press for better funding, so not just on congressional funding, but things like the CFPB, the Consumer Education Fund. We're trying to shape that so it'll be geared more towards one-on-one counseling. There's a lot we're doing out there. We're going to continue that. It's very helpful for your participation, very helpful for the ideas that people are sharing. A lot of what we do really comes from you, and we're going to continue doing that. So we hope you're thinking about joining if you haven't joined already, and if you have joined, please renew this year. It helps us not only financially, but it's also good to say that there's a broad base of support for the work that we're doing, and it really helps build the advocacy work. We'll pay a lot of attention to trying to build a better relationship with Congress in this coming year, because we really have to figure out how to carve out sort of an island of safety for the work we're doing. And we've made some inroads with Republicans, but we've got a ways to go, as Matthew's report reminded us. So want to make sure that that all people are participating on that as well. So I want to make sure we've got enough time for a couple more ideas here that would be relate to our work. So one is that so the Mortgage Industry Standards Maintenance Organization, we mentioned this on the call a couple times before, and it's basically a data tracking program that's put together by the MBA, by the Mortgage Bankers Association, and it's got heavy participation by many of the players inside the housing industry, the real estate industry. So Fannie and Freddie are involved, the mortgage insurers, many of the companies that service the industry, most of the major lenders. And what they're doing is it's basically every mortgage will have a set of data fields attached to it, which will include underwriting, loan performance, loan terms, so that it's easier to evaluate loan, what the loan does, the performance and the value of that particular loan. We've been really pushing to get housing counseling included in that conversation. There were some categories that were kind of out of date in MISMO, and nobody was pushing it, so it was no data was being collected in those fields as far as we know. So here's the idea, is that if housing counseling is thoroughly integrated, when a mortgage gets written, not only would you know what the terms of the loan are, you would know if it had been counseled, which agency counseled it, and what kind of counseling was done, whether it was face-to-face, telephone, online. And I think it sounds like, talking to the regulators, it's going to be education as well as counseling. So there'll be two kind of categories of information in there. We're encouraging that your HUD identification number be used as the number to track the organization. There may need to be some other number created for groups that are not HUD-approved housing counseling agencies that are doing counseling. There's a small pool of them, but in fact there are groups out there, and we want to get them tracked as well. But here's the advantage to you, is that you'll do two big things that will help our industry. One of which is it will allow that client and your work to be tracked on the loan and the loan performance, and so that it'll give us the ability to show that counseling works in the pre-purchase field, and that'll be very helpful because while the NeighborWorks study was very good, it's not as in-depth a study as we would like. This will solve that problem, and it'll solve it on an ongoing basis. Also give us some information about what's working and what's working in terms of best practices and things like that. But I think overall, I think it will help the industry. The other area that's really going to be helpful too is that if somebody was counseled by you and then gets in trouble, they can get referred back to you. And in the 90s, a few groups had these kind of relationships with lenders. It was an area of great success, and it meant that performance numbers really improved, and we were able to deal with some of the delinquency problems, and also gave us early warnings about places where there were problems. So this will really help mainstream the housing counseling world. I hope that it can be used for other purposes as well, such as when you bundle up those loans, you'd be able to say this percentage of this these securities going out to be securitized are counseled. They have these indicators, and it will go into the pricing of the loan, and the cost of the money may be lower as a result, and things that will help our industry and help get better pricing for our clients and things like that. So lots of big ideas in there, but step one, we never have it. Here's the problem we have to solve is in talking with the regulators about this, who are very interested in it, and we're moving forward, we have to document to the originator, the person who's filling out the mortgage application for the home buyer, whether they were counseled or not, and make sure the correct information gets in. So the conversation is, should counseling agencies issue a certificate? What should be on that certificate? What would it look like? How do you make sure you don't have forgeries? You don't have, entrepreneurial, or maybe I should say predatory loan originators just make their own certificates? Is there a way to deal with it electronically? So, some way that locks it in, that some people say it should look similar to being a certified HECM counselor. If there ought to be some restrictions on that. So I don't know. I'm very open to this question. I think we're going to need to have get a solution to this sooner rather than later. We need to engage the industry. So that's one area that we need to be thinking about. But it'll help design our business and help hopefully drive business to counseling agencies, because various players will want to get certificates for their home buyers and help also provide a good tracking system. So MISMO is going to be part of our future. So if you want to weigh in on this and be part of the conversation, you should let me know. Never be shy about.
We do have a quick question on the MISMO before we move on. The question's from Andrew Lubert, and he wants to know if there's an effort to expand HMDA to reflect some of the data fields MISMO is tracking.
Well, so this is an excellent question. So there's a question of sort of how you link the HMDA information to which we won't have access to, specific addresses, to MISMO, but because MISMO will be driven specifically by the property address. But we think that they can collect the same information in the application so that there'll be the equivalent information inside MISMO already. So that's kind of what we've suggested. We don't know exactly. We don't know exactly what MISMO will do. So I think those are the right kind of questions to ask. but we're hoping that among the many things they're collecting are HMDA-like information, so we'll have it all in one place. And I think the thing is that I don't think the motivation for that's going to come from the lenders, but it can come from the regulators. So that's exactly the kind of thing we're working on. So glad you brought it up. The other one is, can there be a link between what HUD is collecting through the housing counseling thing and Ms. Boone? We have the same problem again, which is how do you actually link what HUD has with what's coming in the loan application information, and but that was one that people at FHFA raised. So those are all part of the mix. We're trying to figure that out. Good issue. Okay, so one more quick thing, which is I think all of us have struggled a little bit. You may remember last year we did a survey of counselors about what we should call ourselves, and it was less than half the respondents thought we should continue calling ourselves housing counselors, and many people thought there were better alternatives. There continues to be lots of concern about, the term counselor, and that's one piece of it. There's a second conversation that's going on and the idea is that we ought to just think about how we describe ourselves and what we do in a way that is very succinct and encourages people to come to us, or explains why they should come to us. And so we're interested in having people who are very good about thinking about these questions. That might be you. It might be that you have a great communications or marketing person on your staff, or you might know a great professor who does this kind of work who you might want to bring in on the conversation. But we're going to start the conversation in August. Not the best time to do it, but we'll probably need to keep this rolling in September and the fall when more people are around. But I'm really going to try to get a conversation going in the next week or two. So if you've got some marketing folks, or you've got some interest in gift in this area of communications, can shoot me an email right now, or let Matthew know. We're going to put together a conference call to get this conversation going to help us get a better way of identifying who we are and what we do. We've got some smart people that are starting the conversation already. So this was a good, very helpful call. I'm very glad that you all are on. We're going to do another call in 2 weeks, and we're probably going to have an expert in the housing markets to talk to us a little bit about foreclosures. We're just trying to work out his schedule. If it can fit in, then we'll do that. Want to encourage everybody to really, if you haven't joined National Housing Resource Center, please join. We can absolutely use the support. We're pulling together a list of the funding sources for housing counseling that will be, we'll try to make it as comprehensive as possible, but be available to members. There's the discount on the credit reports, which only a few agencies have taken advantage of, but I just heard of one agency that saved over $200 on the first month that they used it. So, this could be a very valuable tool for you. There are some other discounts available, and we're working on webinars that would be available to members as well. So love to have your participation in that. And at this point, unless there are any open-ended issues, let's plan on talking in 2 weeks, and we'll be in touch through the listserv before then. Thanks a lot, everybody.